Hello traders, you're welcome to this video and I welcome you back to the Forex Geek channel. If you are looking to level up your USDJPY trading game, then you are in the right place. In this video, we are going to be looking at a trading strategy you absolutely need to try if you're serious about mastering the USDJPY trading pair in the Forex market, okay? Whether you are a seasoned trader or just getting started, this strategy can help you spot high probability trades with ease, manage your risk better, and build more confidence in your trading decisions, all right? Before we jump into the details, don't forget to hit that like button if you found this video helpful, and make sure to subscribe for more in-depth trading strategies, tips, and everything you need to succeed in Forex trading. All right, let us get started. Now, first things first, let's take a quick look at the USDJPY currency pair. USDJPY is also known as the yen pair, right? It's one of the most traded currency pairs in the world. It represents the value of the US dollar relative to the Japanese yen. Now, the beauty of trading USDJPY is that it often shows clear trends, making it easier for traders to spot opportunities. All right, but like any currency pair, USDJPY has its own set of unique characteristics. It's heavily influenced by economic data from both the US and Japan, including interest rates, inflation, and even geopolitical events. So while the pair tends to be liquid and offers plenty of opportunities, it also requires a solid strategy to make successful trades. All right. Now, one of the most effective strategies for trading USDJPY is trend following. All right. Trend following strategies. Okay. When the market is trending, it's like being carried on a wave. Right. It's like being carried on a wave. You're just following the flow of price movements. And when you are trading in the direction of the trend, you are more likely to see positive results. In as much as profit is not going to be guaranteed, but you're likely to see positive results. So how do you identify a trend in USDJPY pair? Well, the first thing we want to do is look at the larger time frames, like the 4-hour chart or the daily chart. We're currently on the daily chart. All right. A strong trend is characterized by a series of higher highs and higher lows, as we can see here. Right, we're looking at the current trend in the USDJPY pair. Can we see that we have a bullish structure here? Higher highs, this is a low, this is a higher low, this is another higher low. This was even a low, although it was quite really steep. This was a higher low, this was a higher low, but we're just going to consider this as the low, and another low, right? So we had a low here, we had a high, we had a higher low, we had a higher high, and then we had a higher low, and we had a higher high, and here we had a higher low. So we are expecting another higher high here. Okay, so once we confirm the trend, we want to enter trades that align with the overall market direction. So at this point, entering a buy trade here would be a valid option, to be a valid action to take, right? The reason is we have already made use of trend line. You have to make use of trend lines, okay? You have to make use of trend lines in order to identify, dynamic support and resistance levels. Identify your bullish structure and your bearish structure, characterized by higher highs and higher lows for the bullish and lower highs and lower lows for the bearish. So now that price has gotten to the trend line, we are expecting it to see an upward move. Okay, price does not move in a straight line, so we might have a little wave, and then finally we are expecting the price to actually get back to the upper channel of this trend line. Okay, so having identified that, one important tip is to avoid trading against the trend, okay, unless you are using a counter trend strategy, which can be risky for beginners. So stick with the trend and keep your trades simple. Now that we know we are focused on trends, let's talk about how to fine-tune our entries with key technical indicators. All right. For USDJPY, there are a few indicators that I highly recommend using to get a clearer picture of when to enter a trade. First up is the RSI, the Relative Strength Index. Okay, so I'm going to be adding the Relative Strength Index to the chart right away. Now, when the RSI crosses above the 70 level, it signals that the pair is overbought. Okay, So it signals that the pair is overbought and a reversal might be coming. On the flip side, when the RSI falls below 30, it signals that the USDJPY pair is oversold and a bullish reversal could be incoming. Okay, now let us look at practical example. We can see that when the RSI dropped to the oversold territory here, you can see what happened. The price bounced off this support, and we can see that that was when this bullish move started as RSI began to trend upward. So this would have been a good place to enter a buy after the RSI gave us a buy signal. Here again, the RSI actually gave us a buy signal, and we would have considered entering a buy right after we had the RSI cross above the 30 level, and then we had the price get to this resistance zone before it continued its sell move, because this is a sell trend, right? You can see in as much as RSI gave us a buy signal, but it was just a pullback, so you had to maintain caution when trading against the trend. All right, so you can just ride the pullback a bit, and when there is a sign for a continuation of the sell trend, you exit your buy. Okay, now another nice indicator you can use for trading USDJPY is the moving average convergence divergence. All right, the MACD. Okay, this one helps us to spot changes in the strength, direction, and momentum of the trend. So when the MACD line crosses above the signal line, or above the zero line, as we can see, this cross happened around here, right? So it signaled a buy momentum. As we can see, the signal came somewhere around here, right? So it signaled a buy momentum in the market. Okay, and then when it crosses below the zero level, it signals a sell momentum. As you can see, there was a sell momentum here. All right, now let us talk about support and resistance, two of the most critical concepts when trading USDJPY. Okay, these levels act as barriers that the price where the price is likely to reverse. Okay, where price struggles to break through, and it can offer great entry and exit points for your trade. Okay, so areas where you have significant interest, for example, support is a price level where you have significant buying interest, meaning it's less likely to drop below that point, in as much as support levels and resistance levels are broken, right? But you need to understand that those are significant levels of interest, right? So on the flip side, resistance represents a significant level where selling pressure tends to mount, meaning that the price struggles to break above that level. Now, to spot these levels, you will want to zoom out on your charts and look for areas where the price has reversed or stalled in the past. For example, here, as we can see, those levels where price got to and got rejected, got to and reversed, as you can see. So these are important levels on your chart, right? Once you identify these levels, you can use them as reference points for potential entries and exits. Okay, if USDJPY approaches support and starts showing signs of a reversal, pay attention to bullish candlestick patterns, pay attention to bullish chart patterns, whenever price is around a support. All right, it could be a great opportunity to enter a long position in such conditions. Similarly, if price gets to resistance and starts to stall, that could be a good opportunity to enter a short position. All right, and you want to look for bearish candlestick patterns around resistance and bearish chart patterns around resistance points. All right, now risk management is crucial in any trading strategy, and it's especially important when trading USDJPY. The forex market can be unpredictable, and even the best strategies can sometimes lead to losses. So it's important to protect your capital, right? One way to manage risk is by using stop loss orders. A stop loss is an order you place with your broker to exit a trade if the market moves against you by a certain amount. This helps you limit your losses in case the trade doesn't go as planned. Okay, so you can place your stop loss just below the support level for a long trade, or just above the resistance level for a short trade, right? Another tip is to trade with proper position sizing. Never risk more than a small percentage of your trading capital on a single trade. Usually 1 to 2% per trade is a safe guideline. Okay, this way, even if you experience a series of losses, your account won't take a huge hit. Now that we've covered the key components, identifying trends, using technical indicators, spotting support and resistance, and managing risk, let's put everything together into a simple USD JPY trading strategy. So the first thing, we need to identify the trend using the 4-hour chart or the daily chart, right? So currently we can see we are in an uptrend, right? So if we are in an uptrend, we look for buy signals, right? If we are in a downtrend, you look for sell signals. Next, we use the RSI and the MACD to fine-tune our entry. If both indicators align with the trend as what is happening here, it's a green light to enter the trade. Then we look for key support and resistance levels to help us pinpoint the best entry and exit points. And finally, we set our stop loss orders and trade with proper position size to protect our capital. By following these steps, you can start making more informed, confident decisions when trading USDJPY. Alright, that is it for this video. I hope this USDJPY trading strategy gives you the tools and confidence to take your trading to the next level. Remember, consistency is key, and the more you practice these techniques, the better you will get at spotting high probability trades. If you found this video helpful, don't forget to hit the like button and subscribe to the channel for more trading strategies, tips, and expert insights. Drop a comment below if you have any questions or if there's a specific trading strategy you would like us to cover next. Until next time, happy trading and stay focused.